Volkswagen, once a symbol of German industrial strength, is now facing one of the biggest crises in its history. With profits plunging by 60% and key markets showing sluggish demand, Volkswagen is taking drastic steps, like considering factory closures and cutting staff pay in its home market, Germany. So what exactly went wrong for this automotive giant?
Die Lage spitzt sich weiter zu. Die Entwicklung in der Automobilindustrie in Europa und besonders am Standort Deutschland betrachten wir mit Sorge. Das zeigen auch die jüngsten Meldungen unserer Wettbewerber. Das machen aber auch die rückläufigen Quartalsergebnisse der Marke Volkswagen Pkw deutlich.
Volkswagen's troubles didn't appear overnight. It's a combination of global economic shifts, fierce competition, and challenges adapting to electric vehicle revolution. For starters, Volkswagen's sales in China, one of its largest markets, are down 12% this year alone, and in Western Europe, it's down as well, partly due to weaker economic conditions and rising interest rates. With consumers holding back on new purchases, the entire industry has been impacted, including luxury brands like BMW, Mercedes-Benz, and even Aston Martin. But there's another side to this. Chinese electric car manufacturers are rapidly capturing market share, not only in China but in Europe as well. Volkswagen, along with other legacy car makers, is struggling to keep up with these new players who are producing competitively priced EVs with cutting-edge technology. Investing in EV technology and infrastructure has proven costly, especially in Europe. Volkswagen is pouring billions into the shift from diesel to electric. Yet, many of its electric vehicle plants in Europe are running at reduced capacity. Why? Well, the demand for EVs in Europe has slowed, due to in part to high cost of charging infrastructure and the reduction of government subsidies in key markets. As if things couldn't get worse, Volkswagen recently announced that it may close several factories in Germany, a move that sparked outrage among the 120,000 workers represented by the IG Metall union. Volkswagen even scrapped a long-standing agreement that protected workers from layoffs until 2029. IG Metall, one of Europe's most powerful unions, has responded by threatening strikes and insisting on no job cuts along with a 7% wage increase.
Vor allem, das ist das Wichtigste, erwarten wir heute von Volkswagen, dass die Bereitschaft erklärt wird, mit uns über ein tragfähiges Zukunftskonzept für alle Standorte in Verhandlungen zu gehen. Ansonsten, sage ich ganz deutlich, werden wir mit unserer Verhandlungs- und Tarifkommission die weitere Eskalation planen müssen, weil das die klare Erwartungshaltung auch der Beschäftigten ist, dass wir jetzt zügig auch wieder Klarheit dafür schaffen, wie geht es mit den Standorten, wie geht es mit der Beschäftigung, wie geht es mit dem Haustarifvertrag weiter.
The conflict is creating tension not only within the company but also across the entire German economy. The potential plant closures could ripple through Volkswagen's extensive network of suppliers and service providers, adding pressure to Germany's already slowing economy. Volkswagen knows it has to adapt, and fast. According to its CFO Arno Antlitz, the company needs significant cost reductions and efficiency gains to navigate this tough environment. The Volkswagen's brand's operating margin is down to just 2%, meaning the company has very little room to invest in future innovations without cutting costs elsewhere. That's why they are exploring plant closures, workforce reductions, and other restructuring measures. CEO Oliver Bloom has summed it up. The pie has become smaller and we have more guests at the table. Simply put, there's more competition than ever and fewer consumers are buying the cars. If Volkswagen doesn't cut costs and innovate quickly, it risks falling further behind. In a world rapidly shifting to electric vehicles, new market players, and changing consumer preferences, Volkswagen's crisis serves as a cautionary tale. The stakes are high for Volkswagen as it tries to navigate a complex landscape filled with economic pressures, internal restructuring, and an increasingly competitive EV market. Only time will tell if Volkswagen can weather the storm, adapt to new automotive era, and secure its place in a rapidly changing industry. For more news and updates, keep watching Live Mint.